All right, let's talk about renter's insurance or tenant's insurance. Okay, and this is a really important one because I think a lot of people don't totally understand it. They think, hey, I don't have a lot of stuff. What do I need renter's insurance for? But it covers a lot more than just your stuff. So let's get into it. So here we go. Paul's Peace of Mind Insurance. And here's our declaration page. So again, if your producer or your agency ever says, hey, can you send me your current deck page? This is what they're referring to, right? It's going to have all your coverages on it. So you got your policy number, the effective dates, pretty standard stuff here, your name, your address, the property location. Thanks for choosing Paul's Peace of Mind Insurance. Any kind of discounts. And again, these homeowners and these different policies, auto, renters, they're going to have discount section, usually somewhere visible on the page here. But let's jump into it, right? So you might not be familiar with homeowners, if you're renting, but this is very similar to homeowners, okay? But there's obviously some slight or large differences, actually, because you don't own the actual dwelling, right? So there's no dwelling coverage. But what the heck is in a renter's policy and what does it cover? A lot of people think, oh, it's just my property. Maybe it's liability. Somebody gets hurt in my apartment, but it's more than that, right? So let's look at this one, right? So in this one here, we have coverage C, which would be the same as like a homeowner's coverage C. So on a homeowner's policy, it goes A, B, C, D as the main ones. It does have the E and the F also. But those are the four main ones on a home. What's not on a renter's is A, which would be dwelling, which is the structure, right? So that would be the landlord's policy, the dwelling. But the landlord is not responsible for your stuff, right? So the landlord, and this will be a separate video, they will purchase a dwelling policy. And in the dwelling policy, it's going to cover the structure. It's not going to cover the tenant's personal belongings. So don't get misled. Don't think like, oh, my landlord's going to be able to cover this. You are going to have to cover this stuff. So, but it's more than just the stuff in the apartment, right? Or the condo or whatever you're renting. So let's look into this. So on this one, usually when you're looking into it, you want to think, ballpark, what it would cost to replace your stuff. And, you don't want to just look at what you paid for your stuff. You want to look at what it's going to cost to replace it. So if you're going to replace it, you're going to have to pay what, today's prices are, right? So if you bought a TV, you bought a nice 70-inch TV and you paid, $1,500 or $1,000 for it. 3 years from now, what's that going to be worth, right? 4 years from now, what's that going to be worth? So, it's not going to be worth as much because it depreciates in value. And that's where actual cash value comes in versus replacement costs. So you want to make sure that your personal property is going to be replaced at replacement costs because you have to go back out and replace it. So you got to pay, what it would cost, not looking at the discounts on sale, but what would it cost right now to go to the store and replace everything that you have. So here, 25,000, typical policies are, 20, 25, 30,000, is probably pretty typical for renters. It's probably not a bad idea to go a little over what you have, just have a little buffer, inflation, things like that. You look here, it's $183 for 25,000. You could bump that up to 30,000, and it might not be that much difference. So that's where we look at policies and we look at the value of it. How many dollars are you paying, per thousands of dollars of coverage. You got your personal liability. So this is where it's huge, right? So this is where a lot of people kind of miss the boat, right? So you have $1 million here. So, and I know I skipped over this. We're going to go back to that. But this I want to cover right now because it's very important, right? So your liability, just like a homeowner's, is going to go with you. Okay. And actually this is too. So these things travel with you. Okay. So it doesn't mean, that it had to happen right here in the apartment, your personal property, right? So you go to the gym, you go to the store, whatever it is, you have some stuff in the back, you got your gym clothes, you might leave your phone in your car, whatever it is, you leave certain items in your car. Your auto policy is not going to cover that. Okay. Your auto policy is only going to cover items that are, if you even have comp on your auto, if you do have comp, it's just going to cover items that are like permanently installed in your vehicle, for the most part. So it's not going to cover your loose articles, your personal property. So just like when we talk about a house, we say, what's covered in a house. So you say if you took a house, you turned it upside down, you flipped it over, you shook it, everything that came out of it, that's kind of your personal property, right? Stuff that's not attached. Same idea with your apartment, in your car. That stuff that's not attached, that's going to fall under personal property. So, but liability goes with you also. Okay, so $1 million, that's kind of the sweet spot you want to be at. I'd say at a minimum 500,000, but $1 million, that's double the coverage, and a lot of times the double the coverage is not a lot more in dollars. And in this policy, it's kind of like a bundle policy. They give all this to you included. But what's personal liability, right? So that's, you're liable for causing damage to someone else, right? And that could be a lot of things, right? That could be, you have a dog, you bring your dog to the park, your dog bites somebody at the park, right? It has nothing to do with where you live, right? But that would be personal liability, right? So you're jogging, you're running, you turn inadvertently, you see a loud noise, something happens, all of a sudden you bump into somebody, knock somebody over, they get really injured, they have medical bills, types of things like that. Let's say you have your kid, you go to the store, kid knocks something over, breaks something, your kid's at, a neighbor's house, breaks a TV by accident. These are all things that you're liable for, right? These are damages that, you would be liable for. So, there's a lot of little things that can happen, that could escalate quickly with legal fees, because liability can cover, attorney fees, all kinds of things, that can be covered with that. And this is going to travel with you on vacation, right? Your liability and your personal property, right? So you're on vacation, something happens there, you injure someone, you cause damage, your personal property is stolen, that's all covered, right? Because you're, if you go overseas and different things like that, just watch out. Sometimes you got to look into that, but a lot of policies do cover like worldwide coverage. So what are some other things that could happen? So you could be cooking, you could have a little grease fire, all of a sudden it's a tiny little fire, right? But all of a sudden it sets off the sprinkler system in the whole apartment complex, right? So now what was a little thing, just could happen to anybody, sometimes things like this just happen. Maybe you put it out, you get the fire extinguisher, but the sprinkler system goes off, right? And now you're damaging tens of thousands of dollars of other people's belongings, so the landlord's not going to cover that. Like, you caused that issue, right? So you're liable for that, right? So those are things you want to think about. And then if, vice versa, because they might not have a renter's policy, so they might have their personal property. So what are they going to do? They can't just call their insurance company. They're going to be calling you, and they're going to be, filing a lawsuit against you if you're not going to pay for the damages. So, it goes both ways with this. So you can tap into yours, but, if somebody else caused it, you want to go after them also, right? So, because they're responsible for it. And, you could be hanging a picture, you didn't know there was a pipe back there. You're just nailing a nail through the wall, and all of a sudden you break a pipe. The landlord shows up. I mean, he's not going to pay for all that damage that you caused. You didn't do it on purpose. It's not like you maliciously broke the pipe, but unfortunately it caused a lot of damage, right? So you'd be liable for that, right? So those two things are huge. I could go on and on with a whole bunch of examples, but I think you kind of get the idea of it. So let's talk about these other things here. Coverage D. What's coverage D? Loss of use. So you have $5,000, and what that's going to cover is kind of how it sounds, right? Loss of use. Something happens in the apartment. You're not able to reside there. You have to temporarily relocate. Maybe it was a fire, something happened. So this is going to give you coverage for that, right? Because if you didn't have renters, where are you going to go? Now you got to come up with money thousands of dollars to go try to stay somewhere. So this is going to help you out with that, help offset those costs a little bit. Then you have medical payments. So MedPay is a cool thing. So MedPay is going to help you pay, for other people if something medical happens, right? So it's not for you, it's for other people. So if an incident were to occur and it's kind of relatively minor, and just to make everybody happy, make you feel better, maybe maybe it was your cousin was over, your friend was over, and something happened, you could tap into your medical payments, and then you can pay a small medical bill for them, and then hopefully that everybody's happy. Not everybody's happy that it happened, but you don't have to worry about going into your liability, because also for you to even get into your liability, you have to be proven to be at fault. You have to be negligent in some way or at fault, for your insurance to pay on your liability end. Whereas a medical payment, you don't have to be at fault. You can just decide, hey, this happened, I want to pay this person. Obviously they have to have legit medical bills to submit, but it's not saying you're at fault. So that's a big nice little thing to have on your policy. So what's your deductible? So your deductible would be $1,000. I'm sure most people watching this are familiar with what a deductible is, but in case you're not, you're going to pay the first $1,000. So you're taking on the risk for the first $1,000. Then the insurance company will pick up the tab. And I like to highlight the word limit, because there's a limit, right? This is the maximum they're going to pay, right? And there are some limits inside this personal property that you want to be aware of. So it's not like, so if you had $25,000 worth of jewelry, that's just not going to be covered with this, this regular policy here. Certain categories have their own limits. So you got to read through the policy, or talk to your producer or your agency and go through it, because you want to make sure that you understand what, if you have something that's, above what average would be, if you have more than $1,500 in jewelry or whatever, you might want to have separate coverage just for those items. So don't think this is just a blank check. Everything, something happens to your stuff, that you're just going to get $25,000. So, and we talk about that in the homeowners one. But great opportunities with renters is when you have auto and you bundle it with auto. Look, this is here, right here, right? Auto policy discount. So that's where you're going to see the most value, because look, renters here, I mean, this is a really small renters agreement. It's $183. They're not usually typically that low, but they're not usually that high either, right? A couple $100. It's getting you some coverage. Think about it. I mean, you might be $183. That's another bill, but think of the math there. $183, and you could have up to $1 million in coverage, if something really bad happens, right? And then $25,000 worth of your stuff, right? And you don't know, you don't really think about these things till they actually happen to you, but it's good to be prepared and gives you some peace of mind, in the meantime, just in case, because you never know. And, it's the whole point of insurance, right? To cover you for those what if scenarios. So back to the bundles. That's where you're going to save, right? So you're going to, this is only costing $183. And then if you bundle this with auto, you're going to save some money. I mean, you're like almost getting the renters for practically for free, it doesn't always work out the math that way, but you're going to get a little bit off of your renters just by having it with the auto. So to me, if you're renting, it's kind of a no-brainer to get it. But let's look. So this is very basic up here. But down here is the endorsements. Okay. So what are endorsements, right? So endorsements are just changes to the policy. So you're going to have, homeowners have different numbers associated with them for the different forms. HO3, HO4, HO5, there's all different ones. But the one for the renters is the 4, HO4, and you don't have to memorize that or anything. Just to give you a little bit of knowledge. But the broad form, HO4, that's what's going to be the main form, right? So that's what's all this stuff's going to be in the HO4. And then anything outside of that that changes the HO4, either giving you more coverage or excluding certain things, is all these other things, right? So this is just showing you all the forms that make up your policy, and like flood exclusion disclosure. So flood is never covered on any homeowners, right? So flood insurance you'd have to purchase separately, or sometimes you can get an endorsement depending on the carrier for flood, but typically it's its own policy. So we go through all this stuff, and this is all these different things. But if you want to know what these are, because a lot of times, see how it says included? A lot of times, they look at the most common things that people would want for coverage for the money, and they throw it all in here. So look at all the stuff you're getting on top of what we just talked about. I mean, we talked about all this, definitely worth 183. But you also get all this other stuff, like inflation guard, because prices go up, right? Identity theft resolution. But if you want to see what it is, you could just look here real quick. PP 3728. So you just look down here, you find PP 3728. And what did I pick? I picked a bad example. You know why? That's why I have 3378. Yeah. So there's some insurance carriers out there, so I'm glad I ran into this so I can go over it with you, that they don't even include all of these forms in the policy they send you, right? So they might send you just a quick one. They might send you the full one. Hopefully they send you the full one. You can always access the full one. But I'm glad I ran into that, because I actually been wanting to teach that point. So all of these might not be down there. So, but normally what you would do is you'd go and you look down there, right? And I'm going to show you a different example in a minute. But let's see what is down there, right? So down here we have inflation guard. So go up, inflation guard. Where are we? Right here, HO4036, inflation guard. HO4036. So it's showing you, how to find it, how to find out information. And, it's giving you 5% for inflation. That's what this is saying in a nutshell. How it works with that. So then you can go into the other one. Fungi, dry rot, bacteria coverage. What the liabilities are for that. 10,000, 50,000. What that all means. And, there's all these little things. Perils insured against. So it's giving you, certain name perils over here. And yeah, so this is pretty basic because this whole thing's only 7 pages long. But an example of what you might get. So good to know. Sometimes, this little snapshot here doesn't have everything. So let's look at this one here. Boom. This is a different policy. So we don't need to go through it again, but this one has, 82,000. So this one has more, right? $82,000 worth of coverage, right? Where the other one only had 25,000, I think, something like that. 25,000. So you got 82,000. So now you're seeing the premium bump up a little more, right? Because they're covering $82,000 worth of stuff of your personal property. Then your loss of use was more. Remember, before you were only getting 5,000, you had to relocate, and over here you're getting 16,000. Probably more realistic is what you would need, because just hotel room fees and all the other stuff that goes with it is going to be quite a bit. But then this one takes a little bit less for your liability, right? So this one only has 500,000 for liability, where actually over here you had $1 million. So these are the types of things I look at when I'm comparing one policy to the other. If you were to send me your current policy, this is what we kind of dissect and see where you're at, what makes sense for you. Everything's a personal decision by you. Medical payments, 5,000. Here it's a $500 deductible. It was a $1,000 on the other one. But this one's going to have a whole bunch of those forms also. All these endorsements. But if you look at this one is 20 pages long. It's going to talk about your EFT, setting all that up. But home cyber protection coverage. So I think I put this one in here because this actually is a pretty cool one. So this one's actually, it's $49 for your cyber protection. So what's this person's? Let's see. So their total premium's $816. So that's another thing you want to get used to learning, is you want to find where it says total premium. Sometimes you look this quick, you're like, oh, this policy is $700, but really it's $816. But you know, some of these endorsements are in there, which might sound like, you know, they're, you know, being just added on, but sometimes it makes sense, right? You know, sometimes these are optional. Sometimes these are just showing what things cost, different things like that. You can see a lot of this stuff's just part of the package. It's all included. There's a lot in here. You know, you get a lot. But let's get into this. But look how much this explains to you about home cyber protection coverage, right? You get a limit, $25,000. Your deductible's $500. But you know, look at all these things: cyber attacks, extortion, online fraud, cyber bullying, all these things. You know, it's going to define it. But look, this is 9 pages. You don't usually see endorsements like that long. That alone just shows you like how much is covered here, how well they explain it. Look, temporary location expenses, cyberbullying, you know, data breach event, data recovery costs. So a lot of things that if you've never had your identity stolen or these things happen, you probably don't pay much mind to it. But once you've had something like that happen once, I mean, I hear so many stories when how people are very vigilant. And that $49 may sound like, oh man, you're adding $49 to my policy, but the thousands and thousands and thousands of dollars and hours upon hours and months of headaches of trying to get things back in order for you, you know, it's worth the $49 any day of the week. Can I probably ask any person that's ever gone through any of this stuff if they would just pay $49 to not have to deal with it, and they would probably say 100% of the time. So, but there's your agreement, your cyber attacks, your coverage requirements. You know, you got to report it. 60 days. So you got to report it as soon as practical. You know, extortion explains what they mean by extortion. Online fraud, you know, and everything's online now, right? We're paying all our bills online. You know, all the information. There can be data breaches. You know, it gets into the wrong hands. Legal reviews, professional legal counsel to review, and how you should best respond to it. You know, so they're paying for a legal review. I mean, there's a lot of things here. So this is really cool. Cyberbullying. You know, if you know, it's first discovered, and you know, I'm not going to read this whole thing, but anyway, you know, all these different things it provides. And exclusions. You always want to look for the word exclusions, because endorsements will also talk about what's not included, right? So right here, criminal fraudulent. You know, if you're being criminal fraudulent, obviously that makes sense. They're not going to, you know, they're not going to pay out on that if you intentionally violated the law, or you contributed to the loss. If there's any criminal investigation or proceedings, you know, different things like that. So then there's limits, and then the deductible, which we talked about. So this one was kind of cool. Inflation guard 5% again. So that just means they're going to give you like 5% on all those coverages. So A, B, C, D up here. Then like we talked about the other one, which actually C, D, E would be here. A, if it said A, I think it said A, but it's probably the same form that they use for our homeowners, because this is technically a homeowners policy. It's an HO4, but it's just covering, you know, renters stuff. So, but you know, it gives you another 5% of these numbers. That's why I scrolled back up here. So, so if you have that inflation on there, if inflation happens, you know, you can do that. So yeah, so A, B, C, D. So it will be increased annually by the percentage amount that is shown and applied to the prorated data. So one guy we just talked about in the other one. Oh, here we go. This is what I wanted to get into. Remember I said that if you had a lot of jewelry, if you had 25,000 worth of jewelry, you might want to have extra coverage. Well, this is what that looks like. Okay, so you have your form, but it's called the Scheduled Personally Property Endorsement. And this will be the same that would be on a homeowner's. So this is where it can get confusing too if you don't know how to read the policies, okay? Because if you read this here, it says, oh, $0 for jewelry, $0. What? You're like, what's going on here? Like, none of my jewelry's covered? None of my silverware is covered? Like, why do I have no insurance on this? My golf, like, why? Why, is this an exclusion? No, it's not an exclusion. So this is your Scheduled Personal Property Endorsement, your endorsement, right? So this is that extra coverage. So there's no extra coverage for all these things that have zeros. Why did this person get it? Because they had this extra stuff down here. They had guns, right? So they had 4 guns, and they just kind of rough, estimated them at $500. We get the old 44 mag, Dirty Harry style, the old 38 special, 357 Magnum. So these are, the guns that are insured. So each one of these would be insured for $500. So just to make sure that they get it, it's scheduled, it's shown here, everything's nice and in order. Sometimes carriers, depending on the carrier, they're going to want you to, have some kind of information or like an appraisal or something just documenting how much that's worth. Depending on what you're giving, especially if you're giving like $70,000 worth of jewelry, they're probably going to want to have that value to make sure it's actually $70,000 worth of jewelry. Also, there are some carriers though that'll just give you 75, 80,000. I don't know what their cutoff is. I've seen up to 75,000 before, and they didn't even ask for any kind of proof of what it was worth. They just let it be on there. So every carrier is a little different. So, but this is gonna explain a little more about what's going on here. Newly acquired jewelry will only cover all these different things. So perils against. Whenever you see that, that's named perils. So if it has to be named for all these things, but this is stuff we do not insure loss. So yeah, this is down here in the scheduled part, but this will also be in your actual policy if you have the named perils. So when it gets into open policies, open perils versus named, open would be not, it doesn't have to be on a list. It can be anything except, flood, earth movement. Those are not going to be on your covered. So, but here it's just letting you know they're not going to insure against like wear and tear, gradual deterioration. That's what insurance is for. War, nuclear hazards, if fine arts are recovered. But this one is, designed to go with this schedule, but it's not, it brought back kind of what's in the overall policy with the named perils. So that's why I was just kind of talking about it for a minute. But these, this is talking about coins and different things. So this is designed for that. But let's look at one last quick thing here. This is just going to be a quick look through of a policy of a different one. You can see it's set up differently. You got a renter's policy. All these things, paying for it, your policy number. You can see it's all the same stuff, right? It's just set up a little different, looks a little different, but it's pretty easy to follow. They try to make it pretty easy for you. Let me go down here. We got the home and auto, Paul's home and auto bundle package, and then renter's protection policy. But let's get into the reason why I pulled this up, right? So you're going to see this on almost any form. It's going to remind you that flood is not covered. So it's going to be a big notice. Any home, any renters, any condo policy, you're going to see that flood's not covered. But here's your renter's protection policy. So I like how this is set up. That's why I want to do it, because this is going to break down all this stuff that we've been talking about. And I said, that there's a main policy. This one does a really good job of showing the main policy, right? Explaining what the covered property is, special limits of liability. That's what we talk about, like right here. They're not going to pay any more than $1,000 for these things. Jewelry, so that's why if you had more than $1,000, that's what you're gonna have to look at. They're not gonna pay more than $1,500 for your tools, not more than $2,500 for your firearms, and different things like that, which was interesting to me because that other policy had each firearm at $500, and yeah, it kind of made me curious when I was looking at it, because in my head I'm like, I think you're going to get at least $500 for a firearm. So why that was listed scheduled like that, unless they just wanted to really have it documented that they had the firearms, or maybe that carrier, because it was a firearm, they wanted to have more documentation on that. But you are going to get a little bit more than 500 typically just with your regular homeowners. So this is like the main part. The regular homeowners property we don't cover. Animals, motor vehicles, that would be your auto insurance. So all that liability, different things we talked about, that would be under your auto, right? Your auto policy, not liability with this. So aircraft parts. So I'm not going to go through this whole thing, but I wanted to show you that this is nice, right? This lays it all out for you. You can understand things, trees, shrubs, other plants, fire or lightning, explosion, riots, aircrafts, theft, that kind of stuff. So, they'll pay up to $1,000 for credit card fraud, building additions. Now, this is kind of tricky on we're still talking about C here, but it gets a little tricky when you start talking about building additions, because typically any of the dwelling or like a shed in the back is not going to be part of your renter's agreement. So, but here we go. All right, this is where we say named perils. So these are named. So this is what is going to be covered. So fire, windstorm, or hail. But this one has a little caveat. Does not include loss to the property contained in a building if the loss is caused by rain, snow, sleet, sand, or dust. Unless the direct force of the wind or the hail damages the building, causing an opening in the roof, and then it enters through the opening. This peril includes loss to watercraft and their trailers, furnishing equipment, outboard engines, only while located inside a fully enclosed building. So explosion, riot, aircraft, so if an aircraft causes it. Vehicles. This peril means accidental, direct physical loss to covered property caused by weight, force, power, or movement of the vehicle. So this one is interesting because, a vehicle door, trunk, lid being closed on personal property. It does not include personal property that falls off a vehicle, strikes the ground. So if you leave your laptop on the hood, you take off, that's not going to be covered. Shifting of the load in a vehicle, like if you're moving or something like that. Smoke, vandalism, theft. But this is naming the perils, right? So what's important about naming the perils versus not naming the perils, right? So when you get into like homeowners and stuff, if you can get open perils, that's always better, a little bit better, because it doesn't have to be on this list. This is only going to cover things on the list. So let's say you drop paint on the floor of your hardwoods, and this is more of a home than a renter, but I'm just going to give you a little quick insight. You're painting, you drop paint, spills all over your hardwoods, destroys thousands of dollars of hardwoods. If that's not named in here, spilled paint, it's not going to be paid out unless you had open perils. So it's like little things like that you want to think about. Okay, then down here, you get into your exclusions, right? What's excluded, right? So you got your, so a lot of times you can get this as a endorsement, and this is ordinance or law. So this means like if things had to be rebuilt, I don't typically know why this would be in a renters like this, because a lot of times this isn't going to apply too much to a renters. So I probably shouldn't spend too much time talking about it. But just since I brought it up, if let's say the home was burned to the ground, it was an older home, but now the laws have changed, so they have to rebuild it a certain way for the new code, or yeah, it doesn't even have to be a total loss. Just something has to be fixed, and now it has to be the new code. You know, this is going to exclude any of that, you know, requirement to do it that way with the new law. But you can get an endorsement that will help you out, for the extra fees that might cost. So, water damage is excluded, flood, water, all that stuff. You can get a backup, you can get water backup as an endorsement. So it does cover, if water comes in through the sewers and the drains, power interruption, war is never going to be covered, nuclear hazard, intentional loss, you did anything on purpose, that's not covered, legal criminal acts. I mean, that's kind of common sense. But this is why you see that fungi has its own little endorsement, because typically it's on the exclusion. So if you see something on this exclusion list, important to know, if you see it on here, you could still be covered for it. This is just telling you the regular homeowners. Remember, we're in the overall policy. These are all the exclusions. So you could have this wording, but then you have the endorsement that says, yes, actually we do cover fungi, like we saw. So try not to get too confused with that. People are like, well, am I covered? Am I not covered? Just understand the concept. You have the general agreement, and then anything that changes it would be an endorsement. So you might see two different conflicting things, because the endorsement will be worded, that this pretty much it overrides or supersedes, however they want to word it, what it says in this. It'll say this replaces, let's say they change loss payment. That's a bad example. Let's say they change it. It would say that they replace, what it says for loss payment, so that's kind of, you'll see that a lot with the values, like, because the jewelry was only 1,000, but if you bump it up in a endorsement, then it'll say it replaces that verbiage. Or sometimes maybe you are just getting actual cash value for our personal items, which would be depreciation, things like that. But if it's full replacement costs, it'll say that it replaces that. So, and here's your liability. If you really want to know what you get with your liability, claim, lawsuit brought against the insured. So again, important to know, they have a duty to defend, but important to know that, it's going to be, you're at fault, or they're at least, saying that you're at fault, that they're accusing you to be at fault. Medical payments to others. We talked about that, but if you want to see exactly what you're getting with that, more exclusions. Now it's section 1 and 2. So section 1 was all the property stuff. Section 2 is the liability. So now it's the exclusions for liability. So it just kind of breaks it up. Nice and easy to read. This is really good because it gives you all the information, everything you're going to want to know, like if business is happening, all those different things. And then additional coverages, claim expenses, and, I'm not going to go on and on and on, but I wanted you to see the full thing here, right? So this is the full one. This was just supposed to be a quick walkthrough, but I get excited about this. I love to know what's in the weeds here and what people are getting. And here you go, 1,000. We're seeing that a lot with the jewelry. Increased special limit on jewelry coverage. Yeah, this is exactly what I'm talking about. So, the $1,000 limit of liability is replaced by the limit shown on the declaration page for increased jewelry. So, that's the kind of verbiage that you'll see. So you'll see the conflicting. Well, one might say 1,000, but then this is telling you no, that's replaced by, what it says up there. So, yeah. So that's pretty much a wrap for the renter's policy. And bundling with the auto, that's where you're gonna see a good savings, because we're looking at all the stuff we just looked at, and you're not seeing the policy anymore. But you scroll up, I mean, a few $100s, right? And you're getting all of this coverage, all this stuff, right, for a few $100s. And yeah, I know when you're budgeting, a few $100s can be a big difference. So I get it. I totally do. But, you know, if you're thinking long term, you're thinking bigger picture. If you just, you know, think of it as kind of a required bill or just something where, you know, you just have to have kind of thing. I mean, I don't want to say you have to have it, but it's just I'm just trying to think of the right way to say it. But if you have the mindset of this is very important to have, and the peace of mind that it's going to bring, you know, something I feel is important. But you know, I'm in this world of insurance every day and claims and seeing what happens out there, where you're not privy to all that information, and really a lot of times it doesn't hit home until it happens to you or somebody close to you. But anyway, let's wrap this video up. There's a lot more to do. There's a lot more different policies to get to. So hopefully you keep following along, learn about all the different policies, and we'll see you at the next video.
Thank you.